Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A second bullish white soldier on Friday and a follow-on higher to the previous session's piercing line pattern. It was a lower open, but the market was held in between two areas: the overhead lesser Fibonacci line at 113.04 and the lesser Fibonacci line below at 111.06. These are light support stroke resistance areas, as the main support below starts at the short medium moving average, currently at 109.08, and then the congestion at 108.68 to 108.22 area, plus a small congestion band further down dating from July 2014 between 106.79 to 107.46. The next heavy congestion area below is the congestion band between 101.55 to 103.34. Overhead, we have a wider congestion band between 115.70 and 120 even. Now, previously I had started to look at potential targets on the upside for the recent descending triangles we've seen in this market, as well as the double stroke triple bottoms for the larger March to April descending triangle. I had the potential primary target X1 in the 132.10 area, with a harder secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a potential primary target X3 in the 120.5 area, with a harder secondary target X4 in the 129.20 area. For the double stroke triple bottom pattern, I had a potential target X5 in the 126.5 area. Okay, you got all that? If you don't, just replay the tape. Well, for all that detailed work I'd done to lay out the potentials on the upside, it actually seems these patterns are maybe stillborn, and instead the action since early April could instead be a possible rectangle pattern in construction. Now, I'm not sure on all of this as yet. I'd like to see how and if prices manage to deal with any attempts on the upside over the next few days, but I have already put all the proposed targets topside on probation for a view to possible retirement. If things do not show up soon, then all the X targets will become redundant as soon as the middle of this week. Now, so far today, higher open just under the Fibonacci line at 113.04 and an overall move higher and towards the overhead congestion area at 115.70 to 120 even. This has within it the highs from 2013, 2014, 2017, 2012, as well as the March-based 50% Fibonacci line at 118.01. Spot gold, a second bullish white soldier on Friday, and another interesting session. It was a follow-on higher to the previous session's interesting bullish white Maribozo. The market seems not only to have finished its recent stabilization just under the slowly rising long moving average, currently at 1840, but is now attempting a further move higher instead of lower, as I had initially suspected. It seems prices paused for breath before a pullback up, notably over the long moving average. It all now depends on what the market does when it reaches the upper time, currently at 1854 of the early March to late April bearish Andrews pitchfork. This big bearish Andrews pitchfork is still the showrunner here. Now, above this, we have the 50% Fibonacci line of the March 2021 to March 2022 move at 1873, and then the flatlining medium moving average, currently 1887, just above that. So far today, a strong push higher with a higher open and punching up through the upper level. We're now in fairly free territory until the 50% Fibonacci line at 1873. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with these broadcasts. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.